Namaste. Good morning. Basically, I will just first give you an introduction of how the classes are going to be, what we are going to cover in the classes. Okay. The first relief I can definitely give you to all of you is I am not even going to ask you one question in the classroom. Okay. Neither I want to get low on my confidence, nor I want you to feel low on your confidence. So I'm not going to question you. We are going to work out solutions. If at all there is a homework solution, you can try and work out and check with me. Okay. So basically the time availability also, I always feel that if you study 50 hours, you should score 100 marks. 1 hour படிச்சு 2 marks வாங்கலைன்னா ஏதோ mistake இருக்கு. Okay. So that's where I am concentrating now. 50 hours, 100 marks is my target. Okay. So we should be able to cover maximum of our question paper. Okay. What I expect from you, as I was telling in the group also, the day before, just read the theory and come. And we will work out in the practical questions in the classroom. When we are working out practical questions, we will also discuss on the theory, on the case laws and other things. So let's make the chapter into smaller steps so that you have to spend 45 minutes, 30 to 45 minutes to read the theory once and come to the classroom. Friends, people can say, Ocean, this subject is the questions comes from some 30% of the whole DT area. We are very clear where the questions come from. But unfortunately, we get confused. I want to ensure that, look, this is what DT is. Go and write the examination. This is the DT from the examination perspective. Not even a minute I'm going to go out of examination. Neither I'm here to display my knowledge. Okay, nor I am here to test your knowledge, test your. We'll discuss the passionate DT after your examination as chartered accountants. We can keep discussing, but here the one line objective is very clear. Clear the examination with the magic score of 60 plus. How to happen? We all know that our aim is 20 marks from international taxation, and out of the remaining 40 marks from direct taxation. This is what I am also focusing in the classroom. Right. The institute has released judicial pronouncement of November 22. The 5 case laws the institute have released. We will do it in the classroom. I'll tell you how practical the question will come in that also. The institute has released the recent November 22 amendment. We will discuss it in the classroom in such a manner that I am teaching you fresh for that. I will make you write the things and come. Okay. Especially 1010D, UTI and DRC and the recent filing, the all other things which are part of our amendment. I have already shared with you the amendment lectures in the classroom. We will just browse through those things and progress. Okay. Friends, after all, it's DT. We can very easily score. Have the confidence. Day-to-day material will be provided to you. Whoever comes to the classroom will be provided the hard copy of the material. There is no big reason for that. Okay, there are majority of the students who come first day, get the material and go. So the management has decided, let's go day to day and provide the material. I'm also slowly preparing the material. I have given you a schedule of completion. Can you ask them to come via that door? I have given you the schedule of completions also. I'm starting late today because of Mahalaya Amavasa. Otherwise, my schedule of completion is like this. Today, we will complete PGBP. Today, I had planned capital gains also. It is spilling over to tomorrow. Somewhere during the course of these 8 days, I will extend and complete that. Tomorrow, my aim is capital gain, assessment of firm, assessment of company. I'm not sure, but that's what is my aim. Day to day, I'll give you this because I don't want to rush and fill you with lot of things. Let's take baby steps. This 8 days dedicate to taxation, and then you have to open the book only during your after your paper 6. come back home and open the exam book. That's how it is formed. Revision material is more than sufficient with all prayers only. Whatever we are doing in the revision class, if you browse through once, you are through. In the revision class, whatever we are doing will be sufficient, will be easily covered in that 1.5 hours of 1.5 days of your after your paper 6. Now, without wasting time, I'm having both the material, theory material which I gave you, okay, and the question that we are going to discuss. Well, I start with profits and gains of business or profession. I start with profits and gains of business or profession. Okay. If I look at PGBP as a chapter, okay. If I look at PGBP as a exclusive chapter, I understand that there are two sections which speaks about income, section 28 and 41. These are all the two sections which speak about income. Section 28 and 41 are the two sections which speak about income, with 41 speaking more about deemed income. In fact, 41 speaks more about deemed income, but these are all the two sections, section 28 and 41, which speaks about income. Okay. 28 tells you a list of items which are taxable under PGBP. It is not like house property or capital gains where there is an interpretation required. House property, annual value of a property, you need to understand what is annual value. Capital gains, you should understand what is a capital asset, what is a transfer, such things. But here, section 28 gives us a list of items which will fall under PGBP, which are all taxable under PGBP. That's what we are going to study. And 41 speaks about deemed income. Okay, deemed income. Section 41 speaks about deemed income. Before progressing, we are also clear that there are some case laws associated with this. Okay, especially the Chennai properties case law. Okay. Can you go down? It's there on the bench, the material, if you want. No, go like this, no? Go like this. Go in this door. You can bring those material. If you open the office room door, it's there in the bench. You can bring them. Fine, friends. So, coming back, the most important case law is Chennai properties case law, which has been already tested many times. Okay. We have also a related case law is NDR software warehousing. Okay. Raila Corporation case law, where in all these cases, if the memorandum of association specifies that the main object of the company is to let out properties and earn income, the best way to remember is this OYO homes. Okay. For them, you cannot tax it under IHP. Okay, service apartments, we cannot be taxing them at IHP. So, remembering that, if we recollect, the best way to do is, if the memorandum of association specifies it in the object class, is that the only thing? No. Out of my total income, this should constitute the major income. Because in memorandum, everybody can specify. Memorandum is not the only criteria. Memorandum of association should specify, and also the total revenue, major revenue comes from this activity, then I will tax them under PGBP. Otherwise, I will tax them at IHP. Okay. Then we remember this K and Co case law, where they said that if bank guarantee is provided, then you need to keep deposited some margin money. For any interest from that margin money is taxable under PGBP. Any interest from, because deposits are classified into two. Deposits of surplus money will go to IFOS. The interest will go to IFOS. Deposit which are mandatory to run the business of the entity. Deposits that are mandatory for day-to-day functioning of the business. for which you don't have an option. That will come under PGBP. Okay, K and Co. A related case law is that Rama Multitech, where share application money was received, and it was kept deposited in a separate bank account. Is it because of my choice? No, the law imposes to me that till the allotment is over and the surplus money is refunded, surplus application money is refunded, it has to be kept deposited in a separate account. This is law mandated for me, and it is not my option to keep it deposited. So any share issue expenses can be adjusted against that. It is not going under IFOS. If it goes under IFOS, we all know that it has to be related. Only in investment interest on loan taken for investment can be allowed as deduction. Here it is not so. So these are all some of the case laws which are very popular in terms of questioning with regard to income. Keeping this in mind, let me progress to the items which are there so that quick recollection of the provision. Subsidy. Whenever we are talking about subsidy or any contribution, my dear friends, it is divided into three. Whenever we are talking about subsidy or any contribution, it is divided into three. General subsidy, subsidy for a non-depreciable asset, and subsidy for a depreciable asset. Okay, generally we divide it into three. General subsidy, general means without a particular asset being assigned to it. Starting business in a backward area is a general subsidy. The government supports it. General subsidy. It is not related to any particular asset. Non-depreciable asset. We are mainly speaking about land here. And depreciable asset. The law, our income tax law says these two are taxable as income or categorized as income only if it is to a depreciable asset. Only if it is to a depreciable asset, it can be adjusted with the cost of the asset. Only if the subsidy is directly linked to a depreciable asset, it can be adjusted with the cost of the asset. Subsidy which is of general nature and subsidy towards non-depreciable asset will be categorized as income. Am I clear to you? This is said in ICDS also. Now coming back, subsidy received as a general contribution to be treated as income. Okay, whenever you see subsidy, please write the note as per section 28 and ICDS. Okay, the subsidy, general contribution, subsidy received as a general contribution shall be treated as income. We all have seen suggested answers. We all have seen institute how they are answering. In the one line point which I want to drive home to all of you is state the obvious. In examination, even you might think, I know more than 10,000 cash expenditure is disallowed, so disallowed cash expenditure. They don't want you according to section 40A subsection 3. If you don't remember the section number, not an issue. According to the provisions. Okay, any payment on a single day to a single person in excess of 10,000 otherwise than by approved modes, the whole of such expenditure shall be disallowed. In this case, they want the answer to be like that. Okay, right? So please state the obvious. Whatever you know, okay, in between, whatever you want, you can write, but front and back, ensure that you have written so that it looks that as if you are master of income tax law. Okay, right? So, subsidy received as a general contribution to be treated as income. Okay, subsidy towards construction of hospital building. Subsidy towards construction of hospital building. Sorry, friends. Okay. Is building a depreciable asset? Yes. Building is a depreciable asset since the subsidy is directly related to an depreciable asset. The subsidy received should be adjusted with the cost of the asset. The subsidy received should be adjusted with the cost of the asset. Compensation received for breach of contract. Is compensation a business income? Yes, it is a business income. Again, I am telling you, if I am receiving compensation, all types of compensation, be it for termination of managerial contract, for termination of agency, for termination or modification of any contractual aspects, all compensation received shall be treated as income. Okay. Compensation received for failure to supply plant and machinery. Compensation received for failure to supply plant and machinery directly related to an asset. Directly related to an asset. Whenever a compensation, like subsidy only, whenever a compensation is directly related to an asset, it should be adjusted with the cost of the asset. It should be adjusted with the cost of the asset. Okay, my dear friends. Okay. Okay. This also became a very famous case law in Saurashtra Cements Limited. In Saurashtra Cements Limited, they use the word liquidated damages. Okay, you can see liquidated damages received by a company. Okay, liquidated damages received by a company from supplier of plant for failure to supply within stipulated time. Okay, the department contended it should be treated as income. No, the compensation received is directly and intimately related to with the procurement of capital asset. It is not a receipt of profit earning process. The amount received should be adjusted with the cost of the asset. So compensation, okay, according to Saurashtra Cement Limited, any compensation which is directly linked with the capital asset shall be adjusted with the cost of the asset. Shall be adjusted with the cost of the asset. Am I clear to you? Okay. Non-compete fees is an income. Non-compete fees is an income. The only measure the law does is, if a non-compete fees is received in the course of carrying on profession, it will be taxable under capital gain. Non-compete fees for business, we both are quoting for a tender. I tell the other party that I will pay some compensation, withdraw from the tender. For me, it is a business expenditure. For the receiver, it is a business income. For me, it is a business expenditure. For the receiver, it is a business income. Similarly, if it is for carrying on profession, that is, a company tells a chartered accountant, leave your profession and join us as employee. For leaving your profession, I will pay you a lump sum. This is taxable under capital gain. It is now very decided. Why it is decided also is the TDS for non-compete is there in 194J now. The TDS for non-compete fees is there in 194J, which means the law says, boss, this comes under TDS for professionals. It cannot be technical fee. This comes under TDS for professionals. So it is a decided aspect now. Okay, non-compete fees. If it is in the course of carrying on business, taxable under PGBP. If it is received in the course of carrying on profession, for non-compete fees, TDS is under 194J. Please remember that also. It is under 194J. So that makes it all the more clear that this is more of a profession. In the case it is paid to professionals. Export incentive. All type of export incentives are taxable under PGBP. The examples include duty drawback. Okay, the most important item, the most important repeated question is only this: sale of import entitlement license. Okay, sale of import entitled. This is a very popular question. The adjustment wills that they would have taken it to the PGBP, they would have taken it to the balance sheet, or they would have taken it under capital gains. No, it is taxable under PGBP. Okay, duty drawback, sale of import entitlement license. Okay, any cash incentives, are all taxable as export incentive. Payment received by a partner from the firm. Any payment received by a partner, remuneration or interest on capital, it is taxable under PGBP. It is taxable under PGBP, my dear friends. Okay, interest on capital / remuneration received by a partner from a firm is taxable in the hands of such partner under PGBP. It is taxable in the hands of such partner under PGBP. The amount allowed in the hands of the firm will be taxable to the partners. The amount allowed, whatever is allowed in the hands of the firm, will be taxable in the hands of the partner. Am I clear to you, my dear friends? So suppose if 15% interest on capital is paid, okay, in a or assessment of individual question la, They say interest on capital received by partner at the rate of 15%, 1,50,000. When you do the income, you will take only 1,20,000 as income, because we all know that 12% is the maximum interest. So whatever is allowed in the hands of the entity will be taxable in the hands of the recipient partner, and that will be taxable under PGBP only. Sale value of asset used for scientific research. My dear friends, up to this, these are under section 28. Okay, there are one or two more things under 28 which I will speak, okay, over the period. But idallam 28, idu 41. Okay, sale value of asset used for scientific research or specified business. What is section 41 saying? If we understand what is section 41 saying, we know what are all taxable there. Any expenses, losses, allowances allowed earlier, now recovered is an income. Any expenses, losses, allowances allowed earlier, now recovered is an income. When I purchased an asset for scientific research, when I purchased an asset for specified business, 100% I would have claimed it as deduction. 100% I would have claimed it as deduction. Now, after the research is over, after the purpose is over, I am selling it. Whatever I recover is income. Adanalata, as a tail piece of information, they will say, if you recover over and above the original cost, that is taxable under capital gains. Because up to the amount you have claimed it already, it is taxable under PGBP. Over and above, if you are claiming anything, that is taxable under capital gains. Am I clear to you? Okay. Sale value of asset used for scientific, okay. 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 Whatever is the sale value, please treat it as business or profession only. Section 41, deemed income, it is popularly known as. Okay. Now I am talking about bad debts recovered. Just with a small understanding, remember, bad debts recovered is a business income. Okay, any losses, allowances allowed earlier, now recovered is a business income. But I take this opportunity to tell you something. So I claimed bad debts in the financial year 1920 to the tune of 3 lakhs. I claimed bad debts in the financial year 1920 to the tune of 3 lakhs. The assessing officer allowed for me, only 2 lakhs. Assessing officer allowed for me only 2 lakhs. Now I recover 1 lakh. Now I recover 1 lakh. My dear friends, this 1 lakh is not taxable. Not taxable. The reason is simple. Whatever is allowed earlier, now recovered will only be taxable. At the time of allowing the expenditure, at the time of allowing the bad debts, assessing officer takes the upper hand. He can say that the proof is available only for so much. Okay, bona fide amount is only so much, so I will only disallow this. At the time of recovery, assessee has the option. He will say, sir, the 1 lakh which you did not allow only, now I recovered. So for this, I have already paid the taxation. Do not ask me to pay the taxes again. Okay, bad debts allowed earlier will only now recover, will only be taxable. There can be a circumstance that I recover 1,50,000. In that case, 1 lakh not taxable, 50,000 taxable. 50,000 taxable. That is to the extent not allowed. Okay, the basis of whatever is not allowed only first I recovered. Over and above that only whatever you are allowed, that is what can be taxed by you. Do you understand this logic, my dear friends? Okay, right. So bad debts recovered, taxable under PGBP as deemed income, provided it is allowed earlier by the AO. Provided it is allowed earlier by the AO, by the assessing officer. Where only partially it was allowed at the time of recovery, first apportionment is towards the disallowed part. Okay, first apportionment is towards the disallowed part, which means first apportionment will not be taxable. After that, you can start taxing over and above that. Am I clear to you? Okay, that is how bad debts is speaking about. I'll come to this traveling expenses. That's what I said in section 28. I need to speak about something. Okay. Friends, with regard to waiver, I want you to understand this table, which will be important for us to holistically understand. Which will be important for us to holistically understand, because this is a repeated aspect. There can be 3 types of waiver. Waiver of term loan. Term loans are majorly taken for the purpose of asset. Waiver of working capital loan. Working capital loan is for stock and debtors. Okay. And waiver of interest. These are all the 3 types of waiver. How the income tax law classifies this? Remember, waiver of term loan is not an income, because term loan is for purchase of asset. Whenever you waive that, okay, it should be adjusted with the cost of the asset. Sir, I purchased an asset for 40 lakhs. Bank financed for me 30 lakhs, my dear friends. I purchased an asset for 40 lakhs. Bank financed for me 30 lakhs. I couldn't pay the last 5 lakhs. The bank waived it. That means my asset is only 35 lakhs and not 40 lakhs. My asset is so, always if it is towards a purchase of asset, then adjust it with the WDV of the asset. This is not your recent case law. This is a case law of sale. Once upon a time, this was a judgment pronounced in the case of Steel Authority of India Limited, where they said waiver of loan taken for purchase of asset, term loan, is not an income. It should be adjusted with the cost of the asset, because the cost of the asset reduces. Waiver of working capital loan will be treated as income. It is for stock and debtors. The third thing to understand is a very essential understanding. Ipo 1920, 2021, in both these years, I haven't paid interest to the bank. Okay, I haven't paid this interest to the bank, be it on term loan, be it on working capital loan. For a bank or financial institution, I have not paid this interest. So section 43B operates. Section 43B says this will be disallowed because you have not paid within the due date. You have not paid within the due date, section 43B says this will be disallowed. Now the bank says that I am ready to waive this interest. Okay, in our financials, no impact. No impact. Section 41 says any allowance, losses, expenses allowed earlier, now recovered is income. The bank has not allowed this. The law has not allowed this. This has been disallowed by the law. So when you recover, it cannot be treated as income. It cannot be treated as income. Having this in mind, let us progress to the waiver of working capital.
In the first case, when the asset value is to be reduced, the 5 lakhs is the last 5 installments. What if already the book value of asset is less than 5 lakhs? Like
it is a capital receipt not to be treated as income. If the value in the books is 3 lakhs for the asset, but the loan amount outstanding is 5 lakhs and the 5 lakhs is waived, only 3 lakhs can be adjusted against the WDV of the asset. Remaining 2 lakhs, take it to a reserve account. You need not pay tax for that. It is a capital reserve. That is what sale case judgment is. Okay. Only working capital waiver. The section 41 wordings are cessation of trading liability. Only if a trading liability is ceased. Okay. Any trading liability has ceased, then only it is not a trading liability. So section 41 also doesn't tax it. Section 28 also doesn't tax it. Okay. Right. Coming back. Waiver of working capital loan taken from a recognized financial institution, interest portion, no adjustment required in the year of waiver. This interest would have been already disallowed under section 43B, as it would not have been paid before due date. So in the year of waiver, no adjustment in the statement. Okay. Okay, friends. Waiver of working capital loan principal portion according to section 41, waiver of any trading liability shall be treated as income. Working capital loan anyone need material? இருக்கு. Yeah, thank you. Okay, friends. Okay, right. What does the term cessation of trading liability mean? Specify with examples their provision. Is the provision applicable only for the said assessee or even to the successor? It is also applicable to the successor. Okay, remember, in the case of amalgamation, demerger, conversion of a firm into a company into LLP, in all these cases, I want to give you a ground rule. Provisions are applicable to the transferee entity as it would have applied to the transferor entity had the event not happened. So this will always be applicable to the subsequent entity also. What does the term cessation of trading liability means? Okay, where the liability is waived or the liability is foregone, it means cessation of trading liability. Okay, liability is waived. Just now we saw the examination example. Liability is foregone. Sir, in our accountancy, we have a concept called bad debt, where the debtor doesn't pay it, we call it. What if we are not paying our creditor? Okay, there is no terminology used for that. We call it as right back of creditors. Cessation, where liability is foregone, it means waiver. Okay, cessation of trial. Okay, example of waiver of working capital loan. Okay, right back of creditors. Okay, expenses which are foregone. Okay, provisions will apply to the transferee entity as it would apply to the transferor entity. Okay, now coming to some of the case laws. Assessee, a property company, is predominantly in the business of letting out of properties, and the same form part of their main object. The return filed by the company also clearly specifies that property income as the main source declared and it in the head of business or profession. I am speaking about Chennai Properties and Investments Limited. Two criterias are important. One, it should be specified in the main object. Two, the predominant income from should be from that source. Okay, predominant here means at least 51%. Predominant here means at least 51%. In law, various places we have been using the terminology predominant. Wherever they said that we used to say deemed dividend under section 222E. If the company's main business is lending, how do you know that main business is lending? Just because of memorandum? All private limited companies will amend their memorandum and include that as main object. No, 51% of the asset or 51% of the income should be from that business. Then only it is known as the main business of the company is lending. Okay, so the terminology predominant is there everywhere. Okay, here. Okay, in Chennai Properties and Investment Limited, it is held where the main object of the entity is letting out of properties. So two criteria should be fulfilled. Write neatly in the examination both the criterias and then say adjustment is dash if they have already considered credited it or not. Okay. As a C, you want the answer. As a C, a warehousing corporation was predominantly engaged in the business of letting out of building and godown, but was also providing security and comment on the treatment. This is a case of NDR warehousing. NDR warehousing. The court said two things. One, their predominant source of income is from letting out of godown, okay, which is also there in the main. And two, they also perform. They are not just letting out the godown and saying you take care. It is not at owner's risk. They ensure that they perform activities of small transportation, segregation of goods, maintenance of security, all these things they are performing, which means it is not only letting out, it is a substantial composite activity they perform. Hence, it should be taxable only under business or profession. Okay. Business income, remember it is only business income because they do lot of allied activity also. They do lot of allied activities also, so it is treated as business income. Wait for the next case. Wait for this. This we have already, the last case I have already discussed, liquidated damages received for the supplier, okay, Saurashtra Cements. I am just giving you a small hint. We have just discussed that case law, okay. Saurashtra Cements, it should be adjusted with the cost of the asset. Interest received on excess application money deposited in the under the bank. It is excess application money deposited under what head it is taxable and when. Okay, right? According to Rama Multi Tech issue expenses can be adjusted against such interest income. Issue expenses can be adjusted against such interest income. Please remember. Okay. And the third point to remember is it is taxable in the year in which the allotment is finally made. It is taxable in the year in which, okay, the allotment is finally made. It is taxable in the year in which allotment is finally made. Friends, I'm just taking up an example and explaining you. Let us suppose that I received it in March 21. I received the application money in March 21. In April 22, I am, okay, refunding the excess application money and allotting shares. Okay, allotting shares. In the refund பண்ணும்போது along with interest, I need to refund to the persons who contribute. Now, for the month of March 21, interest the bank will pay for the application money received and kept deposited. That is not taxable in the financial year 2021. It is taxable only in the financial year 22. Okay, taking this as 22. It is not taxable under financial year 21-22. It is taxable only in 22-23 because allotment is made only in April 22. It is not taxable on accrual basis. It might be the interest of March 22. It might be the interest of March 22. But it is taxable only if it becomes the asset of the company, income of the company, because part of the interest I need to refund. Remaining part of the interest can only be enjoyed by me. That's what is being decided in Sri Rama Multi-Tech Corporation.
Which part of interest is to be repaid?
Whatever is your excess application money you are refunding, for that, whatever interest you have earned, it has to be given back to those application people, whoever apply. That's what company law says. I think so. Okay. Interest on margin money deposited with bank for obtaining bank guarantee, K and Co. I told you this interest is also directly linked with the business. Mandatory interest. Nana up panladu. Okay. Sorry. Yeah, this I have answered. Okay, just look at Chennai Properties and Investments Limited. You will find the answer for this. That is, whenever it is the main business and predominant source of revenue, it is business. Otherwise, it is IHP. Employer and employees' contribution to Provident Fund. Employer and employees contribution to Provident Fund. Okay, that treatment will be there in section 43B. Okay, remember this. Okay, the treatment is there in 43B, read along with section 36. Now it is decided by law. Employees contribution should be paid within the due date specified under PF law. Employees contribution should be paid within the due date specified under the respective statute. If it is not paid, then it will be treated as income. Section 224 itself says that it will be treated as income. Subsequent payment will not be allowed as deduction. Once a default, always a default. Once a default, always a default. Please remember, it will be treated as income. So, nama examination adjustment la March month PF is paid in the month of June along with employer's contribution. Employer contribution, no adjustment. Whereas employee's contribution should be treated as income because you have not paid within the due date. Are we clear? Are we clear? Okay, right? We are all reporting it in 3CD itself now. That what is the employee's contribution separately paid, employer's contribution separately. Employer contribution, where it is due, the same has to be paid 1 month prior, okay, September 30th. If it is not paid within the due date, then disallowed in the year of incurrence and allowed. This is there in 43B. This is there in 43B, read along with section, both are read along with section 36. Employee's contribution now, and the law use panna term is a very strong term. Not only now, even before also, never was the intention of the law to allow that. Okay, so it is treated as income. So this is what you have to write here. And either tavara income la only one more thing which I will teach you now. Yeah. Okay, my dear friends, business or profession related, okay, perquisites are there which are also now taxable. Business or profession related perquisites are also taxable. Whether you can encash it into cash or not, it is an income. Whether you can encash it as cash or not is an income. Okay. This is where this particular question comes. Okay, traveling expenses incurred by the principal company for achieving target. Okay, let us take that the agents are taken to Bangkok. They have only one option. Either they can come to Bangkok or leave it. They cannot encash it, whether convertible into cash or not. If they take that option of going to Bangkok, whatever traveling expenses incurred by the company will be a perquisite in the hands of the agent. Will be treated as a perquisite in the hands of the agent. Idodia blown up proportion is what is this? Cap-scan case law. Confederation of Pharmaceutical Association companies. These are paid to medical practitioners. I'll tell you, please listen. This can be a question this time. Amount paid to medical practice, freebies given to medical practitioner. Is it an income? Can it be allowed? Is it an expenditure? Can it be allowed? For the pharmaceutical company, it should not be allowed because it is against medical ethics. It is against medical ethics. Okay? There are medical ethics, okay, which are available, released by ICMR, Indian Council for Medical Research and all, releases ethics. Okay? CA ko ethics undu. Okay? Right? So, useful for auditing paper 10 marks. Na padikumbodhu. Adhavara ethics. Okay? So, when these types are there, any violation of those ethical standards shall be treated as penalty or violation of law, so expenditure will not be allowed. And then the direction termed and said, for the receiver, it is a perquisite income. For the receiver, it is a perquisite. You are carrying on doctor profession, you are receiving something as freebie or gift, it is an income. traveling expenses for doctors, traveling expenses for doctor shall be treated as income if it is funded by a pharmaceutical company. Pharmaceutical company says that we are sending him to do a research, to understand about our medicines, to attend a conference. It is his duty to go, and not the pharmaceutical as a companies to send. So internationally it was conducted and Indian law was changed. Circular was released by the first judgment came. Circular was received by released by CBDT. Circular was challenged by Confederation of Medical Pharmaceutical Association. Court said the circular is correct. Unethical payments are not allowed. Parallelly, CAPSCON case, the scan center paid a referral fee for the doctors. And they said, sir, not TDS, sir. Okay. Just because you have done the TDS, it doesn't mean a violation of law payment. Unethical payment will be allowed. And then, Confederation of Pharmaceutical Association stopped with the High Court level. Sorry. One pharmaceutical company went up, Apex Laboratories. Indeed. Apex Laboratories, they went to Supreme Court, challenging High Court, challenging circular, challenging everything. Now Supreme Court has said, boss, it is an unethical payment, so it will not be allowed. Okay, it is an unethical payment, so it will not be allowed. That is what is come in the November update. That has, so the possibility of this question is high. It is in page number 14 of our material, Apex Laboratories. Expenses incurred by pharmaceutical companies in providing incentive to medical practitioners, which are in violation of ICMR's code. Is it allowable? The incentives given by pharmaceutical company to to doctors has a direct result in exposing the recipient to the sanctums, leading to ban of their practice of medicine. These actions are mandated by law as they are embodied in the Code of Conduct and Ethics, which are normative and have a legal binding also. Okay, so any freebies, anything is prohibited by law and not allowed under section 37. This is against public policy. Use these words when they ask in the examination. This is number November 22 judicial pronouncement, the recently released. It is not in the material. It is a recently released and Supreme Court case law. So gets importance either as a standalone question, because this is a perennial dispute. Now Supreme Court has also clarified, no chance you cannot claim it as deduction. So Anna, my discussion now is, for the receiver it is a perquisite. For the receiving doctor it is a perquisite. So any freebie received, any other benefit received will be treated as income for the receiver, will be treated as income. Perquisite are treated as income. Whether it is converted into money or not, adjustment varum. Okay, for achieving sales target, gold coin was given to the agent, which amounted to 60,000. Okay, rendu vidama question varala. Assessee offered it under IFOS. No, it is not IFOS. It is perquisite under PGBP. Second question is, it is only it cannot be monetized, so it is not considered. No, it is whether convertible into money or not, it is treated as income. Any perquisite is an income for the receiving businessman or a professional. Okay, receiving businessman or professional. Car given to a chartered accountant. Car given to a chartered accountant for arguing the case will be treated as income. Will be treated as income. So it will become taxable. So this is also, so please remember, perquisites are also income in the course of, if it is received in the course of carrying on of business. So in this traveling expenses for directors, please write a for achieving target, please write it as any perquisite received, whether convertible into money or not, shall be treated as income. Any perquisite received, whether convertible into money or not, will be treated as income. You know where the sword is hanging over our head now. Okay, of course, nothing to do with your examination. I have promised you that I will not speak beyond your examination. But sometimes that onion inside me comes and pops up. Please forgive me. For when you all have become chartered accountant, which is just a handful days away, 194R has been brought around now. From this year, from September 1st, they have brought 194R. Deduct tax on this perquisite. Okay, and they have released the 3 circulars. Okay, so when you all become chartered, you all have to tell to your junior, next year question paper la enak or question theriyum. You can challenge them now itself in May that 194R is a question for them. So that is the after impact of all these circulars, all these judgment. There is a section that has been brought around which says deduct tax on the perquisite you are giving. Okay. Or yes varaikkum vandachu, z oda nirthina paravalla the 194. Okay, so that is how this TDS that has been brought around. So that is
how they can track this. Like,
let's talk about it later. Not நான் ரொம்ப நிறைய பேசிடுவேன், எங்கேயோ போய்டும். Okay, not that it is not trackable. Okay, anyhow, friends, I can assure you something. PGBP income one, if you read this is sufficient. But write it very neatly. If you don't remember the case law according to recent case law, don't remember the section. Okay, but why is an interpretation which we have studied. Please remember, beyond this there is nothing in 28 or 41. Okay, now I am going to asset based provision. When I say asset based, I am talking about 3 sections: 30, 31, 32. 30 expenses in relation to building, 31 expenses in relation to plant, machinery and furniture. Both these sections says only current repairs will be allowed. Repairs of revenue nature will be allowed. Capital nature will not be allowed. 32 about the long travel depreciation. 4 types of depreciations are spoken. Normal depreciation, additional depreciation only for manufacturing entities. For new plant and machinery, okay, will be allowed as deduction. Proportionate depreciation, 2 entities claiming depreciation, unabsorbed depreciation. At the end of the classes, we would have revised all these things at various places. First, a firm of chartered accountants commenced their profession on 1st April. For the year ended 31st March, they declared an income of 17,10,000 after debiting the following. Verify the correctness of the income by quoting respective provision. Depreciation of 40% was claimed on computers purchased in June, mobile phones 36,000 purchased in August, printers 17,000 purchased in September, scanners 24,000 purchased in December. We are coming to the 2 case laws, Yamuna Motors and Federal Bank. Okay, in these 2 case laws it was held. Okay, what is meant by peripheral and accessories? That which cannot perform its duty without the main item. A printer, let's understand, case laws are written long back. A printer is useless without a computer. So it takes the character of peripheral or accessory. A scanner is useless without a computer. Whereas A mobile phone need not be linked with a computer. It can perform its operation independently. EPABX, that exchange, office குள்ள இருக்கிற okay, extension lines, okay, all these things can perform its operation without. So those two case laws we are going for them, it is only 15%. So computers 40% it is right to claim, mobile phone 40% it is right to claim, printer 40% it is sorry, mobile phone only 15% they should have claimed, only 15% they should have claimed. Printer 40% right they can claim, but scanner it is used for less than 180 days, it is purchased in December, they should have only claimed 20%, half of the eligible thing. Partner A purchased a Maruti car for 11 lakhs in May, partner B in December. Depreciation of 15% was claimed on both the cars. 1/3 used for personal purpose. You identify that these vehicles are not registered in the name of the firm but in their individual name. A. Sivakami and Co. Okay, A. Sivakami and Co. Beneficial owner is the concept, not the legal owner. Who has funded it? Who is using it? Firm has funded it. Firm is using it. Just because it is registered in the name of the partner, because firm registration is not possible. Only in the partner's name, jointly or separately, the asset can be purchased. So this can also be claimed. Of course, 1/3 should be disallowed. A glow sign board has been installed outside the office premises for 3,10,000. Depreciation of 15% was claimed. Oriental Ceramics, 100% can be written off. Oriental Ceramics, okay, 100% can be. I'll write the answer, I'm just discussing. Oriental Ceramics, you can claim 100%. Rent of 16,000 was paid to a partner as the entire premises is owned by her in used for business. The fair rental value of the premise is only 12,000. 40A subsection 2. Any payment to a relative should be in accordance with fair market value. Where it is in excess of fair market value, such excess shall be disallowed. 40A subsection 2. Compute the revised income. They also seek your advice on the maximum remuneration can be paid. On a market standard, you understand that for a startup practice, the remuneration shall range as 40,000 per month per partner. Okay, 40,000 per month per partner. Okay, this comes under Great City Manufacturing, okay, case law, where they have said when the FMB is given in the law itself, the law itself says up to 3,90%, over and above 3,60%. So இது வந்து 60,000 per partner வருதுன்னு வெச்சுப்போம். Okay, can the assessing officer disallow? No, according to 40A2, another firm can only earn 40,000, you can only be 40,000. No, Great City Manufacturing, they said no, for a firm where the law itself gives the rate 12% interest on capital, adana fair market value, law has given the rate. So you assessing officer cannot take the powers in his hands. So let's start the solution, my dear friends.
In the case of printer, nowadays there are network printers.
That's why he said நீங்க வந்து லாவை வந்து கொஞ்சம் 61 லைன் படிக்கணும். For example, the law says 40A subsection 3. One of the exception is if the employee is stationed outside the base location on a temporary period, you can pay in cash. When it is written, you don't have this debit card, credit card, bank transfers, ATMs. So that's how you have to study. Okay. So for mobile phone, only normal depreciation can be claimed. For mobile phone, only normal depreciation can be claimed, which is 15%. For plant and machinery, the normal is only 15%. Only normal depreciation can be claimed. So I am going to mobile phone 36,000 into 25%. The excess will be disallowed. 36,000 into 25% will be disallowed. Will be disallowed. 36,000 into 25%. That is, the excess percentage will be disallowed. You claimed 40, only 15 is allowed. The excess will be disallowed. Okay. For scanner, only 50% of eligible rate depreciation can be claimed as it is put to use for less than 180 days. Hence, the balance 50% is disallowed. So, I have purchased the scanner 24,000 into 20% will be disallowed. 24,000 into 20% will be disallowed. Are you understanding, my dear friends? Okay. Okay. In A. Sivakami and Co. case, it was held that beneficial owner can claim depreciation even though car is registered in the name of the partners. That if the firm has funded and uses it, then depreciation can be claimed by the firm. However, depreciation for personal purpose should be disallowed. However, depreciation for personal purpose will be disallowed. So 11 lakhs is the car value. Okay, partner. So 22 lakhs into 15% into 1/3. Two cars put together 22 lakhs into 15% is the rate into 1/3 is personal purpose. In Oriental Ceramics case, it was held that glow sign board is not a permanent asset, hence the whole amount can be claimed. So I will add back the depreciation they have claimed and reduce the whole value. They have claimed 15% on 3 lakhs. Depreciation added back 3,10,000 into 15%. According to section 40A subsection 2, any payment to a relative in excess of FMB, such excess shall be disallowed. In the given case, partner is a relative. The rental the answer now you get is known as book profit. The answer now you get is known as book profit. Less maximum permissible remuneration. It is held in great city manufacturing that if the loss provides for a specific quantum, then it becomes then that specific quantum, whatever is specified, then it becomes the fair market value. AO does not have the power to disallow specifying 40A subsection 2. So what is the maximum? 3 lakhs into 90% plus 1318300 into 60%. My dear friends, okay, this minus 3 lakhs into 60% plus 2,70,000 on the first 3 lakhs, 2,70,000, 5,20,980. Repeating, 1618,000, 1618,000 is the book profit. Adila first 3 lakhs 90%, 2,70,000. Remaining 1318,000 60%, 60%. So 520. Am I clear to you? Am I clear to you? So we have covered some case loss, some depreciation, less than 180 days. So if you read through this in the you will get the confidence and you will get the case loss in your mind. Supersonics Limited, engaged in the business of manufacturing. Whenever I read the word manufacturing, I should remember about additional depreciation. Whenever I read the word manufacturing, please remember additional depreciation. Okay. Apart from it, the one other provision manufacturing, you should remember, skill development is only for manufacturing companies. Skill development expenditure, except land and building, everything you can claim, is only for manufacturing. These are all the two provisions. Supersonic Limited, engaged in manufacturing, furnishes the following. Compute the depreciation allowable under section 32. Opening WDV of plant and machinery. Imported second-hand machine. You cannot claim additional depreciation. You cannot claim additional depreciation. Please remember, if it is second-hand, it should be a new machine for claiming additional depreciation. From Taiwan on 16th May, only normal. Machinery purchased and installed on 12th July, you can claim. Acquired and using an electric motor vehicle for transportation of raw material to flow shop, and the vehicle is of no other purpose. Okay. So you can claim additional depreciation for this also. Fork vehicles, in the money within the factory premises, if you are using any vehicle is plant and machinery, and it is a new plant and machinery, you can claim additional depreciation. Since the vendor demanded advance payment on a bank holiday, the same was paid in cash to the extent of 1 lakh. You cannot include. Where? Please remember, till financial year 2021, payment on a bank holiday is accepted. If it is made otherwise, they scratched, they took it out. Now on a bank holiday also you cannot pay otherwise than by the approved means. So my dear friends, this will be just 10,90,000. This will be just 10,90,000. Are you understanding? Are you understanding? New machine acquired and installed on 23rd November for the purpose of manufacture, half of the eligible depreciation, both normal and additional. Sale value of old machine. Payment made on 31st March for the imported machine, and the exchange rate fluctuation resulted in additional payment of 96,000 or 96,000. Section 43A says any exchange rate fluctuation for purchase of asset, it should be considered as cost of asset. Once more repeating, ஒரு asset வாங்குறேன், any exchange rate fluctuation will be considered as cost of asset. Will be considered as cost of asset. Are you understanding? Okay. So it should be added to the cost of the asset. Accounting standard says நீங்க expenditure claim பண்ணலாம். No. According to income tax law, whenever payment is made, the exchange rate fluctuation should be added to the cost of the asset. On analysis, it is also understood that a new machinery is acquired in the preceding year for 19 lakhs. This information is given because last year I would have claimed only 10% additional depreciation for that, because it is put to use for less than 180 days. The balance 10% should be claimed in the current year, financial year 21-22. That's why this information is given. Okay. So let us claim depreciation. The blocks are plant and machinery, and vehicle is also there, which is also 15%, but it is a separate block. normal depreciation 23 lakh 18,000 into 7.5%. Normal depreciation 23 lakh 18,000 into 7.5% plus the balance 4882 minus 2318 into 15%. 23 lakh 18,000 into 7.5% because used for less than 180 days. The balance 4882 minus 2318 into 15%. Please remember, for this half of the rate I can claim, okay, on the balance which is available for full rate. Okay, here it is directly 10 lakh 19,000 into 15%. Additional. Okay, remember it is only for the new plant and machinery. 8 lakh into 20% plus 23 lakh 18,000 into 10% plus last year second half purchased 19 lakhs into 10%. Repeating, 8 lakhs into 20% plus 23 lakh 18,000 into 10% put to use for less than 180 days. Last year I purchased an asset in the second half only for 19 lakhs, for which I would have claimed only half of the eligible additional depreciation. The remaining can be claimed now. Here it is 10 lakh 90,000 into 20%. Okay, okay. The answer depends on lot of notes which we need to write. Please remember, it is only those notes which carry the maximum. So one by one the notes. For the second hand imported machine, additional depreciation cannot be claimed as the law specifies that it should be a new machine. As the law specifies, it should be a new machine.
Where they allow second-hand
35 AD, 80 IAC, all these things are different. Here, new machine means depreciation should not have been claimed under Indian income tax law or any other law. But whereas they Indian income tax law. I agree with you. Okay. The second point, my dear friends, the second point. Okay. According to section 43A, according to section 43A, any exchange rate fluctuation between date of transaction and date of payment should be adjusted in the cost or WDV of the asset. should be adjusted in the cost or WDV of the asset. Please remember, it should be only adjusted, and there is nothing called restatement and all income tax law. Between the date of transaction, date of payment, any exchange rate fluctuation, it should be adjusted only in the cost of the asset. The third point which is important to understand, okay, where payment has been made otherwise than by acceptable modes. It is easy to remember what is unacceptable mode. Cash, bearer check, cross the check. Cash, bearer check, cross the checks are unacceptable modes. All others, bank transfer, RTGS, NEFT, account payee check, account payee draft, account payee things, debit card, credit card, BMAP, RuPay are all acceptable payment. So please remember what is unacceptable. Cash, bearer check, cross the check are unacceptable basis or payment. Where payment has been made otherwise than then whole of such payment will not be allowed. Okay. For the second, for the asset purchased and used for less than 180 days, the balance 10% can be claimed in FY 22-23. That is the 23,18,000 asset for which you have claimed only 10% during the current year. The balance 10% can be claimed in the, please write it as a note. State the obvious in examination. State the obvious in the examination. Please write it and communicate that you know the provision. Okay. Vehicle used directly or indirectly in the manufacturing process will also qualify for additional depreciation. May I progress? May I progress? I am moving to the important section 33AB. The important section ABA will not, I have never seen a question. Okay, even the department has forgotten that section, don't worry. AB, plantation sector. Okay, if you deposit on or before the due date of filing returns, you can claim 40% of profits or amount deposited, whichever is less, as deduction. If you withdraw the deposited money, use it only for the purpose of buying of plant and machinery, field related activity, etc. One aspect which we need to understand there is all plantation sector partly agriculture, partly business. All plantation sector. Okay. Tea and coffee. Okay. Is 60-40. 60 is agriculture, 40 is business. Rubber 65-35. In the coffee, raw coffee, that is, which is not roasted and grounded, okay, which is at the raw stage, okay, raw alone will be 75-25. Raw alone will be 75-25. Repeating, all plantation sector, okay, will enjoy this particular, okay, okay, rubber 35-65, coffee grown and cured 75-25, this is known as raw. 60-40, tea is also 60-40, and any saplings which they sell, 100% will be treated as agricultural income only. 100% will be treated as agricultural income only. Okay, a provision to recollect. Ashwath is actively involved in plantation sector, provides you the following particulars of his income. Compute the total income. Income from growing and manufacturing tea before claiming deduction under 32, that is depreciation, or 33AB, 22 lakhs. He has withdrawn from tea development account in May and invested in plant and machinery 8 lakhs. Ashwath withdraws another 5 lakhs from tea development account and uses it as providing advance to his residential house property. You need to tax it. Where you are misutilizing that amount, you will be taxing it. Ashwath deposited during the current year 7,50,000 in tea development account. Income from growing sale of grown, cured, roasted and grounded coffee. Income from growing and manufacturing of rubber carried on in Burma, fully taxable. Only Indian agriculture income is exempt. Agricultural income, land or building should be in India. If it is foreign agriculture income, fully taxable under IFOS. Agricultural income from outside India is taxable under IFOS. Seed, tree saplings not taxable. Dividend income from Kannan Devan tea 12 lakhs. The company's business is growing and manufacturing tea. Ashwath purchased an agriculture land for 25 lakhs when the stamp value is 26 lakhs. Ashwath purchased a new house property for 44 lakhs and used it for his residence. He did not own any other property. For purchase, Ashwath took a loan of 40 lakhs at 9% per annum on 1st June. Please change it to 21 from Indian Bank. Okay, from Indian Bank. Sometimes we travel that extra mile. Don't get worried. So many provisions I have to remember. You will. Okay. This section is 80 EEA. 80 EEA. Available for assessees who purchase their first house. Stamp value of the house should not exceed 45 lakhs. Okay. And this should be their first house. It should be self-occupied. They have taken a loan for purchase of house. Section 24 la 2 lakhs claim manu. Self-occupied property. Self-occupied property we will claim 2 lakhs. Over and above 2 lakhs, up to a maximum of 1,50,000, we can claim it under 80 EEA. 80 EEA we can claim it. Okay, so that's what we are going to study in this question. Okay, it's an assessment of individual type of question. Ashwath purchased an agriculture land for 25 lakhs, stamp value 26 lakhs. If you buy an asset, this goes under 56(2). Okay, this goes under gift, inadequate consideration. Inadequate consideration will also be considered as gift. We will check that. Dividend from Kannan Devan tea. Tata la ஒரு கேஸ் இருந்தது. Okay, Tata is earning income from growing and manufacturing tea. How much is taxable? Only 40% is taxable. 60% is agriculture income exempt. 40% is taxable. They are giving you dividend. You are a shareholder. The shareholder says, "Enakku 40% dane." The shareholder says, "For me also 40% only taxable." Because had the company retained that, you would have only taxed it at 40%. Okay. Then the lawmaker said, "What is agriculture income? Earnings from land and building. You are earning from shares. How can that be agricultural income?" So for you, even though for the company, suppose if a company which is claiming 80I, 100% as deduction, they give you dividend. Do you think 100% deduction for you? Okay. Company is in infrastructure business. I'm also infrastructure. Okay. So that cannot be claimed. This will be fully taxable under IFOS. This will be fully taxable under IFOS. Let's start the solution.
Stamp duty and the land duty. If the stamp duty.
வரேன்டா ராஜா, நீ என்ன சொல்றேன்னு எனக்கு புரிஞ்சிருத்து. உன் அளவுக்கு வேகமா வந்துட முடியாது, வந்து சேர்ந்துடுறேன். Now, there is a predominantly you will have in your mind, suppose in examination, suddenly you look at this provision. Okay. He has withdrawn from tea development account and purchased the plant and machinery. Can he claim depreciation? Yes. He can claim depreciation. Okay. There is nowhere in the law that is restricting you from claiming depreciation. If you had you directly invested, you would have claimed. Just because you are routing it through tea development account, they are not going to deny you the quantum of exemption or depreciation. Yes, you can claim depreciation. Hmm? Yeah. Five lakhs, no? That is not used for specified purpose. It will be again taxable. Up to this, you understood? Let me. Used in the process of manufacturing கொடுத்தா தான் additional depreciation. Don't assume that. Tractor is also a plant and machinery. Okay. Saplings, the irrigation equipments are also plant and machinery. அதெல்லாம் ஃபீல்டில் யூஸ் பண்றோம், not manufactured. அதனால don't assume. Okay. Are you clear? Okay. Now I am going into particulars. Business income, agri income. T 60, 40 and 60. So out of this, 40% is business income, balance 60% is agricultural income. T. %40 is business income, balance 60% agricultural income. Coffee. Same 40% and 60%. Same 40% and 16%. 14 lakhs into 40% is business income. Fully exempt. I'm going now headwise. I'm going now headwise. Roman 1, PGBP as computed. 12,92,000. Roman 2, other sources. Roman 2, other sources. Income from rubber activity carried on outside India. Carried on outside India, 17 lakhs. 17 lakhs. Okay. Income from okay. Dividend from Indian company, fully taxable, 12 lakhs. Inadequate consideration on purchase of immovable property. Actual price paid 25 lakhs. Stamp value 26 lakhs. 110% of actual price. Since the stamp value does not exceed 110%, the whole of inadequate consideration taxable. Okay, 110% deviation is allowed. 10% deviation is allowed, you will not tax it. Okay, so only 10%, 2750 மேல போயிருந்தா I would have taxed the difference. Since it is less than 2750, I will not tax. Okay, I should have first written this. House property self-occupied. NAV is nil. Interest is 40 lakhs into 9% into 1st June. 10 by 12. June to March. For a self-occupied property, you cannot claim more than 2 lakhs. Am I clear to you? Am I clear to you, my dear friends? Am I clear to you? Okay, 38,92,000. So what did we learn is that 60-40, maximum deduction of 40%. Other learnings are just as an ancillary aspect. We are just recollecting. So somewhere in our mind, we keep storing these things. Somewhere in the mind, okay, in a temporary storage for 1.5 months, we are just keeping it stored so that if at all new house property na உங்களுக்கு classroomல இத படிச்சிருக்கோம் strike ஆகும் 80 EA need not strike, but you know that's something we have studied in the recent okay, so that's how this has been computed. Okay, before going to 35 AD, Before going to 35 AD, let me have a quick recollection of 35 AD. This is for that specified business. You need not remember the specified business. The law will either use 35 AD or the word specified business. Okay. Cross-country natural gas pipeline, housing projects, infrastructure facilities, hospitals, hotels, sugar, agricultural warehouse. But you need not remember these things. The law uses. All capital expenditure can be claimed as deduction, except cost of land, goodwill, and financial instruments. All capital expenditure. Capital expenditure of past period can be accumulated and claimed in the first year of operation. Right. Then, since you are claiming capital expenditure as deduction, no depreciation. Loss from specified business can only be set off against the income from specified business indefinite period. Indefinite period you can carry forward it. Okay. And it is now optional to claim 35 AD. If you want, you can forego. Why? Because of interaction of sections like 115 BAA, BAB, BAC, where you can forego these things and claim only depreciation for these things. The law has said that now 35 AD is only optional. Okay, right. Raja Bhoga Yoga Limited commenced a hospital with 200 patient beds in Kanjipuram, which qualifies. The company gives you the following particulars: compute their taxable income, expenditure incurred in the past, cost of construction, equipment, amount paid to a famous doctor in Kanchipuram for merging his practice, 40 lakhs recorded as goodwill. You cannot claim. For the doctor, it is now an income. For the doctor, it is now an income. Okay. Other expenses to be capitalized with the cost of building. Expenditure during the current year, cost of building, equipment purchase, 2 lakhs was paid on single day. You can only claim 12 lakhs. You can only claim 12 lakhs. Furniture and fixtures purchase 7 lakhs. 2 lakhs was received as capital fund. You can only claim 5 lakhs because it's like a subsidy. You can only claim 5 lakhs. Revenue detail, income, expenditure, depreciation, any of this is not allowed. Following further details available for expenditure. Payment made to a doctor without deducting tax at source, 30% will be disallowed. 30% will be disallowed in section 40. Payment made to a foreign consultant assisting in establishment, tax not deducted 5 lakhs. However, the consultant submitted sufficient proof in July of the next year that he has computed the income. You will disallow 100%. In the next year, 22-23, you can claim it back. You can claim it back. Payment to another non-resident without deducting tax at source. The said non-resident does not have permanent establishment in India and the entire services are rendered outside India. Allowed. Maruti Suzuki case. Maruti Suzuki case, it is held that if payment is made to a non-resident, which is not an income accruing or arising in India, he does not have a PE in India, all services are completed outside India. In India, it is not at all taxable. When it is not taxable, where is the question of deducting tax at source? So, in Maruti Suzuki case, it is held so. Payment made in cash for expediting approval, disallowed. Secret commission, disallowed. Additional information. Payment received from a lab for referring patients, 21 lakhs, considered as business income. For a lab, it is not a business expenditure. But for us, it is a business income. Gift received from pharma companies, considered as business income. Perquisites, both are section 28 perquisite. Determine the deductibility of each item. I'll go working note for 35 AD expenditure. I'm going now for allowable expenditure. Okay, there are some expenditure which cannot be claimed. Okay, total regular expenses. Total regular expenses they say is 17 crores 10 lakhs. Less not allowed. 30% of 30% of payment made without deducting tax at source. 15,80,000 into 30%. 100% of payment where the income is not taxable in India, where the income is not taxable in India for that person, and he is also not having PE. What is the question of deducting tax at source? So, non-deduction does not mean expenditure will be disallowed. Secret commission, my dear friends, takes the character of illegal payment, hence not allowed.
Will not be allowed in the current year itself because the other person have paid their
When will he submit the proof?
31st July.
So it is in the next year. It will be allowed only in the year in which assessee submits the proof that it has been considered as income and taxes are paid. So even though I get the proof before filing of return, still the law does not say the year in which you received the proof, the year in which he submits the proof. So first year you need to disallow, next year only you can. Am I clear to you? Okay. Friends, I want to tell you something that uh, don't get worried that I don't remember this provision, etc. Now learn it. If you don't remember, now you are recollecting. If you are not even knowing, now you are learning. Okay. Fear, don't allow fear to. I'm not like other faculties. I'm just saying it's after all CA. Don't worry about anything. Okay. Don't need to horns. So if you are not able to recollect, I mean, if you don't able to remember at that time, now you remember. If you are not learning, now learn. Okay. It's all simple. Even a person who starts preparing 3 years before, I will say the last 3 months matters. Whenever you start your preparation, the last three, it all boils down to the 100-day game. Okay. And that's where you are. So never worry. Okay. We'll take a small break, my dear friends. We'll take a small break and come back for the rest. The next question is very important and very interesting question. We'll come back to that. One of the questions which is going to tell us all the disallowance provisions. In the question la na exam la varunu solla, ana in the question la ungalku இந்த provision ஞாபகப்படுத்தும். Instead of making it so ஒரு 35 AD question போடும்போதே we did 40A3 43B அந்த மாதிரி போட்டோம்னா somewhere we keep all questions will have 40A2 40A3 43B. Every question has these adjustments. Okay, so instead of doing one question on everything, the next question is slightly, I mean, you will understand the provision. That question is not for examination, it is for understanding the provision so that you will be able to answer it in the examination. Okay, the following particulars are provided for 3 consecutive years for a non-manufacturing entity. Net profit before, so we are only going to make the adjustment before. Okay, the following items are before depreciation. Payment to a non-resident without deducting tax, non-resident submitted proof in the, so this 76 will be claimed in this year, 84 will be claimed only in this year. You cannot claim it in the respective years, you will be claiming it. Payment to a resident assessee without deducting tax at source. I'm asking you to concentrate here. Okay, this year I can only claim 70%. This year 30%. Oh, sorry, no. Sorry. The next adjustment says this: rectification of default 64,000 and 2 lakhs. So in the Varsha, I can only claim 70% of this. This year, I can claim 140 into 70% plus 64 into 30%. Last year's rectification this year, whatever has happened, 30% of that can be claimed. Here, I can claim 2 lakh into 30%. 2 lakh into 30%. So, whenever default is rectified, in the case of TDS, the rule says, if tax is not deducted at source or not remitted within the due date of filing returns, if the payment is to a non-resident, 100% of the payment disallowed. If the payment is to a resident, 30% disallowed. However, the disallowed amount will be allowed in the year in which the default is rectified. Disallowed amount will be allowed. Disallowed is only 30%. So default rectification 64,000 na, adla 70% already claimed, 30%. Salary paid to a director without deducting tax at source, director submitted proof later, 70%. This year 70 plus 30 of last year, this year 17 plus 30 of last year. Okay, directors, sorry. Director's sitting fees without deducting tax at source. For sitting fees, should I deduct tax at source? Yes, 194J. Interestingly, threshold limit 0. 10% rate of TDS. Threshold limit, normally 194J, threshold limit 30,000. But for director's fees, threshold limit is 0. So, 70% will be claimed, 70% will be claimed, the total of this into 30% in the last year. Payment to a non-resident outside India and the said payment cannot be regarded as income in India, fully allowed. Employer contribution to PF paid exactly on the due date of filing returns, allowed. Employees contribution will be treated as income. Disallowed illa, idu vandu income. It should be treated as income because it is not paid within the due date of the respective statute. Interest on term loan paid after due date. This will be claimed only in the next year. This will be claimed only in the next year. Provision for gratuity will never be allowed. 40A subsection 7. Actual gratuity payable at the end of the year, but the payment is after the due date, no problem. Gratuity is not covered under 43B. Allow it in the respective years. 43B doesn't cover leave encashment தான் cover பண்ணுது. Okay, 43B ல payment to a resident transport operator on a single day. 40A3 says for a resident transport operator the limit is 35,000. So here I will not claim, but here I can claim. Amount paid for the for purchases directly from growers of coffee can be claimed. Agriculturist இவங்கெல்லாம். They are agriculturists, so you can pay them by cash. This falls under the exception. Waiver of term loan by the bank for machinery purchase. It is not a income. It should be reduced from the machine value. Details of plant and machinery: opening, additions in number, depreciation for all other assets. Okay, right? First, let us start it with the depreciation working notes. A non-manufacturing. On top itself, they have given it's a non-manufacturing.
Ground loan will have no impact.
No impact. No impact. It will not be against asset. Are you clear? Are you clear? Okay. All of us are getting these answers. Okay. So please understand. Now I am going for computation of income. We are just recollecting provisions, not anything else, not an exact question, but recollecting provision. Just recollecting some provisions, less allowable expenses. The first is concerned payment to NR without deducting tax at source, 100% disallowed in the year of incurrence, so it cannot be claimed, but allowed in the year in which default is rectified that is proof submitted. So will be 76,000 . So in the year of proof submission will, as I was explaining our friend, year of proof submission will be subsequent year only. In July la da proof submit panna mudiyum. So last year or the 31st March you will disallow. Even if it is submitted before your due date of filing return, the law does not say allow it once you get the proof. Allow it in the year in which proof is submitted. So law wants you to pay the tax in the first year, then claim the deduction.
There is some form 26A, not AS, 26A.
Maybe I'll check that, but it has nothing to do with this is the provision. Maybe form is there. Okay. Payment to resident assessee. Okay. 70% of expenditure allowed, balance 30% disallowed. So here it will be 1,24,000 into 70%, 1,40,000 into 70%, 30% allowed in the year of default rectification. No, that's net profit. You want me to go up?
Contribution is
Employer contribution to PF paid within due date, right? So it's allowed, no?
so we should do.
Sorry, friends. No disallowance. So mind is.
Generally, all are add back.
Yeah.
Transport account. The question, it is not mentioned as cash flow.
Yeah. I'll make the correction. It's own question. So while typing, I would have. I should have added this also to income. Now I am adding waiver of working capital loan. You want me to scroll up or down? Are you clear? Okay, just a question to understand where you will claim, where you will not claim. Nothing else. Which year you should claim, which year you can claim the balance. That's my intention of the question. When you read an adjustment, you will be able to understand what is the percentage claimed. Solunga, you want me to scroll up? So 48.3, 48.2, 48.7 provision for gratuity, 43B statutory payments. Okay. Then the last two things, the last set of provision is more about administrative provision. Books of accounts marandurunga. Audit 1 crore, but 10 crores if there is a 5% limitation. Payment as well as receipt. Total of payment, total of receipt. And unacceptable moves, if it is less than 5%, 10 crores is the limit for audit. And then comes the presumptive computation provision. Okay, 3 presumptive computations are: one is AD 8% or 6%. If it is electronic channel, 6%, otherwise 8%. ADA for professionals, 50%. AE for motor vehicles, flying of vehicles, 7,500 per month or part thereof, even one day. Okay. If it is HCV, 1 kg, 1 rupee. 12,000 kgs means HCV. So suppose if I have a 14,000 kg vehicle, per month 14,000 is my income. Okay. All expenses are deemed to have been claimed, which means even unabsorbed depreciation is deemed to have been claimed, but business loss you can claim. All assessees who are opting for presumptive computation need to file their return before July 31st because non-audit cases. But if they want to declare a lesser income, audit cases, October 31st. Presumptive computation, advance tax only last installment. Presumptive computation, 15th March installment now. 234C need not be computed for June, September, December. Only for last installment they are liable to pay. 44 AE they have to claim. Yeah. 44 AE they have to do it because they know the number of vehicles, but for the others it is only the last installment. Sridhar provides you the following income. Compute his income and tax payable assuming he has not paid any and is ready to file his return in July. Sridhar also seeks your opinion on computing under 115 BAC. He is running a retail shop with a turnover of 1.50 crores. He has so far not opted for presumptive computation. expenses and depreciation. He failed to maintain books. No other option, 8%. No other option, 8%. Consultant engineer, gross receipts 40 lakhs, 50%. Owns 6 small vehicles and 2 HCVs of 16,000 kgs each for whole of the year. Not maintained. However, due to maintenance, one HCV was not used for 3 months. That doesn't matter.
Tax.
It is taxable. Even if you put to use late, it is still taxable. Sridhar purchased the electric vehicle for his personal purpose at a cost of 11 lakhs. 80 EEB up to 1,50,000 you can claim on the interest. Loan was obtained on the State Bank for 8 lakhs at 8%. Loan obtained from friend will not qualify. Only for Sridhar resides in his own house. Interest on self-occupied property 2 lakhs only he can claim. Interest on self-occupied property 2 lakhs only he can claim. Be it 80 EEB or this 2 lakhs. If you are opting for 115 BAC, this is not applicable. All deductions under chapter 6A, 80C to 80U, except 80JJAA and for companies 80M, you cannot claim. Okay. Investment in tax savings, 80C. Brought forward loss from retail business can be claimed. Unabsorbed depreciation you cannot claim because it is deemed to have been claimed. It is deemed to have been claimed. Okay. Together I'll work out. You cannot claim under optional tax regime the self-occupied property interest also. Let out property claim along, whatever may be the interest. Self-occupied property you cannot claim. base tax working, it goes like this, my dear friend. 3676 minus 10 lakhs into 30% plus 1,12,500. For the first 10 lakhs, we all know 1,12,500. For the remaining 26 lakhs 76,000, 30%. 30%. 115 BAC goes like this. This minus 15 lakhs into 30% plus 187,500. Up to 15 lakhs, it is 187,500. Beyond that, it is 30%. It is 30%. Beyond that, it is 30%. Up to 15 lakhs. First 250 nil. Next 250 5%, 12,500. Next 250 10%, 25,000. Next 250 15%, 37,500. Next 250 20%, 50,000. Last 250 25%, 62,500. So 0 plus 12,500 plus 25 plus 37,500 plus 50 plus 62,500 will take you to 187,500. 1 lakh. Have given, no? Okay. Okay. Are you clear? Okay. I just want to knowledge sake understanding. For 150, I mean, just starting, for 115 BAC, this 250 even for senior citizen and super senior citizen. They don't have 3 lakhs and 5 lakhs separately. This 250 is for them also. One. Second, rebate, special rates are all the same. And also, surcharge and HEC are also the same. There is no change on those things. 2,50,000 is the basic exemption limit. Normal system la, for senior citizen, basic exemption limit is 3 lakhs, super senior citizen 5 lakhs. But once you go for optional tax regime, for everyone 2,50,000. Kadayadu, avங்களுக்கு kadayadu. Once you go for 115 BAC, basic exemption limit 250 for all. I'll do advanced tax later, but this is just for. Am I clear? Okay. Okay. So presumptive computation, assessment of individual, presumptive computation like this, we have to work. Okay. Let's go and understand this chapter. Whatever questions are there are examination questions only. Shall I? Okay. Question number 7. Tripod is a trading company dealing in automobile accessories. Okay, so it's a trading company, no additional depreciation and all. Compute the income relevant for the assessment year. Net profit as per P&L after debiting provision for taxation, we should add back provision for taxation. We should add back provision for taxation. The company has credited the following to the P&L account. Refund of GST penalty. When you had paid the penalty, you cannot have claimed the expenditure. They would have disallowed the expenditure. Refund of sales tax GST penalty, so they would not have given you that. Now when you are refunding, it is not a business income. You have already paid tax for that. You have already paid for tax. Okay, so this should be taken out. Receipt of insurance company compensation on account of stock, it's an income. Recovery of bad debts, income. Liquidated damages received for destruction of machinery in fire. Saurashtra Cement case law says it should be adjusted with the cost of the asset. Saurashtra Cement's case law says this is not an income, it should be adjusted with the cost of the asset. Interest of 11 lakh, margin money deposit to obtain bank loan. K & Co case law says it is a business income. It is not any other income. It is a business income. Maintain as it is. No adjustment. The following are debited to the profit and loss account. Accountant of the company defalcated 3,50,000. Management filed a police complaint but understood he is untraceable, so wrote off the whole amount as expenditure allowed. Normal business expenditure, where these are some 10 years back case laws. So these are not your recent case laws. So you have to general course of business, normal course of business. These are all the words which you can use for, okay. It is not a capital expenditure. It is not a personal expenditure. It is not violation of law, anything allowed. Company spent 60,000 on issue of convertible debentures which were written off. ITC case law allowed. In ITC limited case law, shares issued are not allowed. Debentures issue, there is no specific provision allowed. Company had imported 6 spark plugs from Germany which were confiscated. The company paid regularization fee, the penalty. Millennia developers, what they have paid is penalty, disallowed. Okay, this is in a case law called Millennia developers. So it should be disallowed. Company decided to start a manufacturing unit to manufacture car battery in a foreign backward area with collaboration of a West German company. Spent 170 travel expenses, 750 as remuneration. However, due to technical difficulties, the project was abandoned. Okay, now all of us have to understand about abandoning of project and its treatment. I have it in that 9th question also. Feasibility study expenditure versus expenditure on both getting abandoned. Sir, I am already a trading company. I am trying a new manufacturing technique for which I incurred some expenditure, but it did not materialize, so I abandoned the project. Allowed. Allowed. I am a trading company, but I tried to do some manufacturing. Company decided to start manufacture of car batteries. That is not my existing business. That is not my existing business. It is a new line of activity for which I am incurring some expenditure and I am abandoning, disallowed. The four conditions in section 37 are: should not be capital, should not be personal, should be incurred for the purpose of this business or profession. Any expenditure on new line of activity and the line successful achina, the prepaid preliminary expenses of that line. But if it is abandoned, it will not be. So, in Priya Village Roadshow case, they said that PVR is already a theatre. They were upgrading. They were trying to upgrade the sound system. And it failed. So, that is allowed because they were already in that business. Suppose they have taken a film, abandoned the film. You cannot claim it against your theatre business because it is not your line of. So, this is a new line of business, not allowed. Managing director of the company went to USA to explore the possibility of exports. However, he suddenly fell ill and was hospitalized for 3 weeks. Medical expenses 115 allowed, regular course of business. He has gone on an official trip. Allowed. Company paid tuition fees of 7,10,000 to MD's son to study abroad for a newly formed scheme. Disallowed. XJ Forging's law has said if it is already an existing scheme, one of the beneficiary is director's son, allowed. If director's son is the only beneficiary or the first beneficiary, so from today I am starting the scheme. That means your intention is not proved. So disallowed. Company spent 2,10,000 for skill development, not allowed. Trading entity. Only for manufacturing companies, skill development expenditure will be allowed. Trading entity. Company incurred 4,50,000 to construct a footbridge across the road for safe crossing of employee. The property need to be handed over to the state government and to be used at public at large. Infosys. Okay. Infosys, where you created an asset but you don't own that asset. That asset was created indirectly to benefit your staff only. Okay. So it is allowed. Infosys case law. This is allowed because it indirectly, maybe public at large are using. You are not owning the asset. If you are owning the asset, take it to balance sheet and claim depreciation. You are not owning the asset. At the same time, you have incurred expenditure. The expenditure is for benefit of your employees, allowed.
Skill development. If some trading entity
revenue expenditure will be allowed. Yeah, you can make the assumption, not an issue.
GST.
Yeah, allowed. Yeah, in that case, yes. Bonus of 11 lakhs provided in the year has been paid to employee trust in the following September. Shawson Chemicals case law. Company declared, understand the case. Company declared bonus. Employees did not accept the bonus. They went on a strike. They disputed. We will not accept, the bonus is less. Anana pay panno. Within due date pay pannatha, I can claim it as expenditure. So what I did, I transferred it to an employee welfare trust. Dispute was resolved and the payment was made to employees from the trust. Assessing officer said, you have not directly paid. No. The employee trust is a trust where you cannot withdraw the money back to the company. So paying to the employee trust and also ensuring that it is later paid to the employee within due date is allowed. In this case, one of the inferences we derive is that employee trust should have also paid it within the due date to the employees. Illena not allowed. Suppose if the question is given, they paid to employees trust in September. The trust paid to employees on December, disallowed under 43B in the current year. The employee trust should have also paid that within the due date to the employees, then only allowed. We will take if where the question is silent, we are all chartered accountant, assessee friendly approach. Okay. So we believe that everything is proper assessee now. Okay. So allow. Company has provided advance to its supplier to the extent of 15 lakhs. The same was providing by obtaining a bank loan at 12%. In the case la again ipa illa, the company had enough balance in their bank account, but still took a loan and paid advance and paid interest. Assessing officer disallowed the expenditure, saying you had enough fund. Court argued, court interfered and said, what is you can only check whether conditions are full. Don't do business. Then what will he do? How will he deploy his funds? Okay. So it is allowed. Okay. But if it is for supply of plant and machinery, then this interest borrowing cost says till the date of putting the asset into use, it should be capitalized. Company has made provision for gratuity 180 disallowed, actual gratuity paid allowed. Okay, actual gratuity paid allowed. Income tax disallowed. Company took loan for paying the above income tax and paid interest. Interest on loan taken for payment of income tax partakes the character of interest on income tax, so disallowed. Repeating. Interest on loan taken for income payment of income tax. Or well on income tax play panlena, you would have paid 234B. To avoid that only you have taken the loan. So this interest partakes the character. Takes the character of. So it is not allowed. Company spent 5 lakhs on online advertisement paid to an agency which doesn't have permanent establishment, failed to equalization levy, not deducted, 100% disallowed. 100% disallowed. Okay, 100% disallowed. Okay, I hope you can work out the answer. I will just give you because of running time. Okay, I'll give you the answer tomorrow in the worked out format. Excel ungaloda share pannikiren. But I hope the adjustments are clear. No technically difficult adjustment. Okay. Before going to the next question, I want to again repeat it. I have been in our regular classroom. I repeat it in every class. I want to repeat all the 7 days. This 75% of the question you will know the answer. If there are 10 adjustments, 7 to 8 adjustments, you know the answer. Only 2 adjustments you will be doubtful about the answer or not clear about the answer. Ana number mind eppadi train pannirkona, that 2 will kill that 8. Not that 8 will give confidence for the 2. We have wrongly trained our mind. Okay. This time also I had 2 solution papers of the friends ever. I saw steps mark. I saw mark, tick mark, step by step. So my dear friends, if you are confident 60% level, go ahead and attempt that question. Kandipa and the 8 adjustment me theriyala abdinalu you will not lose major marks. And the 2 adjustment la onnu ungalku doubtful ah dhaan. So please, if the previous question, if it is an examination question. If it has appeared in the examination, illada doubt la namakku varum. Orvel the company veedu kattirko. Okay, so it is only your unwanted thinking, too much of thinking, straight away. You remember you are back a student and you are not an articled in your office. Okay, forget your articleship period. forget your other aspects, only be as a student. Interல ஒரு கொஸ்டின் படிச்சோன்னா என்ன ஆன்சர் தெரிஞ்சதோ அதே தான் ஃபைனல்லையும் தெரியணும். ஓகே, வேற ஏதாவது ஆன்சர் தோணிட்டுனா உங்க ஆடிட்டர் நான் திட்டணும். ஓகே, PQR Limited, a manufacturing company. Remember, it is a manufacturing company. It is a manufacturing company. So additional depreciation la varum. Okay, manufacturing footwear and leather products for the past 10 years had a net profit of 544 lakhs as per the statement. The company was subject to tax audit. The net profit is arrived at after debiting. Depreciation as per company law disallowed. A sundry creditor whose dues 64 lakhs were outstanding for long time settled for 52 lakhs based upon a compromise. The amount waived has been credited to the statement of P&L. Correct. Section 41. Waiver of trading liability, foregoing of liability. Employer's contribution 6 lakhs to PF for the month of March was deposited on 30th June. No problem. Interest payment debited 60 lakhs include interest on term loan 50 lakhs availed on 1st April at the rate of 12% towards purchase of machinery during the year. Till the date of putting the machinery into use, it should be capitalized. After that, it is revenue. We will come to that point. Remember, payment of 20 lakhs without deducting tax at source to a subcontractor for processing raw leather supplied by PQR is debited to the statement of P&L. Section 194C says, Section 194C says, whether for a job worker I should deduct tax at source or not. It depends upon who supplies raw material. If I just place the order, if the job worker purchases raw material, process and then gives me, it is pure sales, no TDS under 194C. Maybe 194Q now will come, 50 lakhs, 10 crores எல்லாம் இருக்கு. But as of now, whereas if me, that is the customer or the person or my related entities, supply the raw material and the job worker just to process it and supplies back, 194C contractual payment is applicable. Tax has to be deducted at source. Payment of 20 lakhs without deducting tax at source to a subcontractor for processing raw leather supplied by me, PQR Limited. Okay, 30% disallowed under 194C. 30% disallowed under 194C. Please, we should write a decent enough answer saying, I know it is coming under job work contractual payment only. The company has not made provision for 24 lakhs being fair estimate of an amount as payable to workers towards periodical wage revision. The provision, okay, ICDS 10. Any provision based on past experience with a reasonable certainty is now allowed. This is the only favorable ICDS. Any provision based on past experience and on a reasonable certainty is allowed. So you can claim this 24 lakhs. You can claim this 24 lakhs. The written down value of asset, factory building 10%. Plant and machinery 340 lakhs, including 60 lakhs acquired on 1st April, put to use on 1st November. So, inga polam. Okay. There is a loan I have taken on 1st April for 50 lakhs at 12% per annum. Okay. April, May, June, July, August, September, October, these 7 months it should be capitalized because it is put to use on. So, 50 lakhs into 12% into 7 by 12 should be capitalized in the loan segment. Disallowed here, there I will claim it. Of course, I will claim additional depreciation also. Okay, additional depreciation. Computers 40%. It may be
additional depreciation 10% or 20%.
1st November 10%. It may be noted that the above values have been duly recognized while providing depreciation in the books. During the year, the company has employed 24 additional employees qualified as workmen. Even that word is not there, it is still okay. All these employees contribute to RPF. 12 out of 24 employees were employed on 1st June for 23,080 JJAA இவங்களுக்கு உண்டு. 4 joined on 1st July on a salary of 25,500 கிடையாது. 25,000 is the limit. 8 joined on 1st November கிடையாது because 240 days should be the minimum period. Okay, 150. The salaries of 2 employees who joined in 1st June were paid by bearer check. அவங்களுக்கு கிடையாது. So you will not take 12 employees, you will only take 10 employees. For 2 employees, you are paid by bearer check every month. By bearer check every month. So 40A3 disallowance will also come. 80 JJA also they cannot claim. Okay, I will do this question, don't worry. Employees contributed to EPF 3 lakhs recovered from their salary for the month of March and shown in balance sheet under the head sundry creditors per remit. Was remitted on 31st July. So it is an income. It should be expenses claim, it should be taken as income. Compute the total income, assume the company has not opted. I will start by doing the question tomorrow morning. Okay, I will start this by doing the question tomorrow morning. So we will meet 6 o'clock tomorrow morning. I will start by doing this question, complete PGBP and capital gains, and walk into definitely assessment of firm. PGBP பொறுத்த வரைக்கும் I can tell you it will go for 3 days because not only today, when we do assessment of firm, we will do PGBP. Assessment of companies, we will do PGBP. Assessment of individuals, we will do PGBP. So don't think we are just working 12 questions. We will be working at least 20-25 questions in PGBP covering all massive adjustment. But I can tell you one thing, repeated adjustments are almost 5 or 6. 1 or 2 only in a question is a new adjustment. For example, in this question, we should have remembered on the interest padikumbodhu, there is a, they have particularly given it is for plant and machinery. Borrowing cost will be applicable. Meet you 6 o'clock tomorrow. All the best, friends.